first, maybe addressing disability insurance, the question I want to talk about right off is how much should we be getting? Because I will hear certain stats. Some people say you need to get 60% of your income. That should be covered. But then other people say, forget about that. Maybe focus on your key expenses and go from there. Then I have other people who tell me, you know what? It's the most important type of insurance you're going to get. Just go for as much as they will give you. Maybe you could just give us a bit of a roadmap on how much we should be striving for.
Yeah, it's a really interesting question because you have so much flexibility in how much you can get. It is kind of in your, as a client, it's in your control of, do I get, like you said, the 60%, just my expenses, maximize it. What I find, and this is from experience from seeing people go through disability claims quite frequently, the more you have, the better. And what I don't think a lot of people understand is when you're looking at buying disability coverage, the insurance companies will only actually give you up to like 70% of your income on a good day, on the best amount. So even at that, you're already sort of not getting that full income protection. So you always want to get that maximum. And the reason why I say that is because you never really know when a disability is going to hit. You could be young in your career, it could be later in your career, but you always want to plan for that worst case scenario. And if it is something that happens to you young in your career and it does take you out for a year, 2 years, 3 years, that's going to have a huge impact on so many other things, not only your expenses, but your retirement planning, your children's education planning. And so the more that you can buy early on, the more of that cushion that you're providing yourself. And another thing that people don't really know too is insurance companies do what's called, and what we refer to as, reverse discrimination. So the more money you actually make, the less percentage of income you are getting protected. And the reason why that is because if you're making, $1 million a year and you're getting a $25,000 tax-free monthly benefit, they're looking at it saying, okay, you don't really need that much to live off of. And so we're not going to give you, 70% of your income. We're only going to give you 40% of your income or 50% of your income, because we still want that incentive gap, that driving force to make you want to return to work. And for those that make a higher income, they don't necessarily, again, need all of that. And that's why they start to claw it back a little bit. So always, in my opinion, adding on as much as you can, covering your expenses, projecting out that future of what this could cost me if I had an early disability, if I was out of work for a longer than expected period of time, will make it a lot easier, because when you get into those higher income years, you're not going to be able to buy as much. So adding it on, sort of securing yourself when you're younger, when you're growing, it makes a lot of sense for your future.
Is there an absolute amount that they will max out at? You mentioned, I think, a $25,000 benefit. Is that the max amount, or is it usually a percentage of your income that they will max out at?
So it's an interesting kind of combination of the two. The maximum on most disability policies is $25,000. That's equivalent to just shy of $1 million income. That doesn't mean that that's the maximum you can get, though, because what happens is you can actually apply for more by a secondary policy, at which point, yeah, they'll do exactly what you said. They will look at percentage of income and they will kind of put the two together. The maximum we've actually seen purchased is up to $30,000.
Okay, maybe we can kind of pivot into the high earning professional who just says, listen, my expenses are high. I'm going to need a very large amount of coverage should something happen to me. So what are the options in play for somebody who has a high income, has high monthly expenses, and says, well, I may need a bit more disability insurance? What are their options? Do they have to go for a second policy? Is that even possible?
There's a few things that I would first off start to have them do is to look at where the expenses are coming from, because a lot of people forget that you can have two types of disability insurance. You can have personal insurance and business insurance, your business overhead expenses. And sometimes people lump in their monthly needs as their personal mortgage or their company mortgage, and they kind of put all of it into one. And so if we separate the two, you can actually get quite a substantial amount of coverage, more than you expect. So for example, you can get up to $50,000 on business overhead. So covering things like staff, covering things like utilities, or if you have multiple locations, perhaps multiple rents, multiple mortgages, that sort of idea. And so that will help benefit and take off the weight of carrying so much personal disability. But if you still need more personal disability, that's where we say, okay, perhaps we've maxed out that $25,000 policy. We can apply for a secondary policy. But I also will have people start to look at using critical illness as a secondary support. Because a lot of the time when you're getting into that higher income earning years, you're also older, and at which point you're more likely to have a critical illness. So we can look at saying, okay, perhaps the maximum I can get is $25,000 a month, but I might buy a $250,000 critical illness policy, which will pay out in 30 days. And that will substitute and supplement with my disability to sort of give me that extra cash flow on a monthly basis. So you're right to a degree, you will cap out, you will get to a point, but you can be really creative in what we're using to help build up that protection from other assets and other areas.